On today's show, according to the USA Today, another tax headache ahead. The IRS changing paycheck withholdings, and they say it's going to be a doozy. That coming up, along with our commentary on today's Money in the Morning. Well, hello, welcome back to Money in the Morning. I'm Joe Saul-Sehy from my mom's half-finished basement in Detroit, Michigan. You can find me hanging out on Twitter at Average Joe Money. This is the show where we go over a headline ripped from the financial press. And not only do we read it like some shows do, we actually talk about what it means to your wallet. We'll break it down. Today, we're talking taxes on Money in the Morning. Oh, just a ton of fun, isn't it? Let's talk taxes. I know that you're super excited about taxes. You got your tax form ready to go. You're waiting until April 15th to finish it. We're not going to talk today about this year's taxes, though. We're going to talk about next year's taxes. So I'm looking forward to that discussion. So Laura, why don't you kick this thing off for us?
Good morning. You supply the coffee. We'll bring the headlines. Here they come.
Let's move on to a headline here from USA Today. USA Today, in this headline, Jana Heron writes, another tax headache ahead. IRS is changing paycheck withholdings, and it'll be a doozy. Did you see this? Just what we want is more fun with taxes. It's almost tax day this year. Then you might be finishing up your 1040 going, wow, this was a little easier this year. For most of us, it was easier if you do your own taxes than it has been in past years. We can't have it be easy forever. It's got to get hard again. Why is it getting more difficult? Well, this is interesting and actually not all bad. Let's jump into the piece, shall we? Jana writes, you finally finish your taxes and are learning for better or worse the ins and outs of the new law. But wait, the law isn't done with you. There's another complication coming out later this year. The Internal Revenue Service is changing how you adjust your paycheck withholdings. An early indicators show it won't be easy. The agency plans to release a new W-4 form that better incorporates the changes ushered in by the new tax law so that the amount held back for taxes in each of your paycheck is more accurate. Now, for those of you wondering what a W-4 is, W-4 is this form that you filled out when you first went into work. And then when you get your tax refund back and you go, hey, that's a lot of money. And I keep reading that maybe I don't want that much money. You go back to HR and they give you a new W-4 that you fill out. Really easy right now. One-page form, super simple. Well, the form itself is a couple pages, but most of it is instructions. The base form is half a page. Super, super simple form. Anyway, so a new W-4 form coming out. The agency's goal, a taxpayer shouldn't owe or be owed come tax time. It's a noble goal. That was me, not the USA Today piece. Back to the piece. But the changes won't be simple, said Pete Eisberg, head of government affairs at ADP, the payroll and human resources company. Filling out the new form will be a lot like doing your taxes again. It'll be a much bigger pain, he says. The accuracy will be 100%, but the ease of use will be, wait for it, 0. While the new form hasn't been released yet, the IRS last summer put out a draft version of instructions seeking feedback from tax preparation companies and payroll firms. Instead of claiming a certain amount of allowances based on exemptions, which had been eliminated, the draft form asked workers to input the annual dollar amounts for non-wage income such as interest and dividends, itemized and other deductions, income tax credits expected for the tax year. For employees of multiple jobs, total annual tax wages for all lower paying jobs in the household. It looked a lot more like the 1040 than a W-4, Eisberg said. Imagine you get to fill out, you go into your new employer and they hand you a thing that looks like you got to fill out a 1040. That might take a day itself. Once again, my commentary not in the piece. Back to the piece again. The new form referenced up to 12 other IRS publications to fill out. It was so complex and different from the previous W-4 form that Ernst & Young worried employees would struggle to fill it out correctly and employers might need to offer training beforehand. Why is it taking so long? The tax and payroll community expressed many concerns about the draft form aside from its complexity. Many cited privacy issues because the form asked for spousal and family income that workers might not want to share with their employers. Other employees may not want to disclose they have another job or do side hustle work outside their full-time job. To avoid disclosing so much private information, taxpayers instead could use the IRS withholding calculator, but it's not easy to use and the instructions are confusing, according to feedback from the American Payroll Association. So in September, the IRS scrapped plans to implement the new W-4 form for 2019 and instead is planning to roll it out for 2020. Another draft version is expected May 31st, according to the IRS, which will also ask for public comment. Quote, we encourage taxpayers to take advantage of that opportunity and send us comments on the redesign, says agency spokeswoman Annie Packner. IRS will review the comments and plan to post a second draft later in the summer. The final W-4 version will be released by the end of the year in time for the 2020 tax year. Once it arrives, probably going to need a lot of information on hand. This is Kathy Pickering, Executive Director of H&R Block's Tax Institute. That might mean lugging in past 1099 forms, pay stubs, or last year's tax returns to fill it out correctly. You'll need your filing status, the number of dependents, information about your itemized deductions, such as home mortgage interest, state and local taxes and charitable deductions, earnings from all jobs, information about non-wage income, such as business income, dividends, and interest. Quote, if you're married, both you and your spouse work, it'll also be helpful to know information about your spouse's income, she says. Let's talk about this piece. I get the IRS's goal here. I totally understand it. We've talked here before. Other bloggers that I know have talked about not getting back a huge refund because you're wasting money, not owing a ton of money because you might have a penalty. So they want to cut down on those numbers. Looking at all the things that we're talking about in this piece, I get the goal. I think about the efficacy of that goal. And efficacy, for those of you that aren't familiar with that term, is the usability of that stuff, of making that change. So in other words, what's the change really going to yield? If you're getting back a $1,500 refund and this form makes it so you get back no refund and you got that $1,500 quicker, what would you do with it? Or if you didn't owe the $1,500 right now and then you do in the future, what does not having that put away, what's the impact of this? I don't have any data around that. I wish I did. But it seems to me that the impact is fairly low. And so I love this idea of making it cleaner, but I also think that that making it the time cost benefit for what we receive not that high. And nothing I like worse than spending a ton of time on forms that I don't need. I just went through a mortgage process again and with this house in Michigan. And I have to tell you, just filling out my address over and over and over on stupid form after stupid form, just idiotic. Some of the forms that we had to fill out, some of the data that we had to fill out and put on 16 different forms, unbelievable. In most cases, we just had to sign, right? They were pre-filled out. And we could have a whole show about that too, about how I don't like that. But the process could be easier. And I think that this could be the same way. But let's get away from that, because we talked a few days ago about focusing on stuff that we can control. So if this becomes bigger, I'm going to give you the same takeaway here that I give people when they're filling out the FAFSA, when they're filling out their tax form for the first time, when there's some complex transaction that we have to do to get ahead financially. Every once in a while, complexity rears its head. And listen, you're probably like me. You don't like complexity and you pull away immediately and don't want anything to do with it, right? Maybe, but certainly me. That is totally me. If I even think it's complex, I'm usually surprised that it's not. But you got to do this. Just eat the elephant one bite at a time. And what you find is it's a lot less work than you thought it was. And once you get there, once you actually fill out line number 1 and then go to line number 2 without looking at line number 35 and just fill out the next one and fill out the next one before you know it, it's done. Part of that's interesting. You can use some of that psychology on yourself to just start the form and look at the thing. You can use that in workouts. You can use that with money management. Just sit down. Instead of trying to do the whole budget reconciliation at once, just try to do one line. And once you sit down to do one line, if you've never budgeted before, what you'll find is that you'll naturally go on to line 2, line 3, line 4, because the difficult part is actually sitting down to do it. Doing push-ups. Just tell yourself you're going to do one push-up. We talked to habits expert James Clear over on the Stacking Benjamin show, and he talked about that. Sit down to do one push-up, one sit-up. Before you know it, you'll do 5 just because you're there. You might do 10. Might get crazy and do 15. So good stuff. Let's say hi again to our friends hanging out here in Facebook land. Lori says, if the form comes out later this year, aren't we still out of luck with the withholdings the year until it's released? I'm always baffled about the proper withholdings got burned this year. I'll tell you, yes, the forms are due for the end of this year so that you'll have them for all of 2020. So your withholding will change for 2020 taxes that you'll file in 2021. So we're looking, Lori, way out. It works the way that it does now. You're going to have that when you file taxes 12 months from now. Jim says, I wonder what my former employer would have thought if I told them about my blog income. It's that part, the privacy part, I totally buy. Who wants to go into their employer's office and turn into an HR person that I don't know, who might be a very nosy person? Why do I want to turn that into them? They're going to have to work on privacy in this. If you're going to ask for other income to go through my employer besides that income, I'm going to want some privacy. And Sean says, on the other side, HR is going to hate that. Absolutely. Imagine HR having to give classes to teach people how to fill out the new form. Not great. Just absolutely horrible. Our takeaway here on piece number 2, once again, just eat the elephant one bite at a time. Also, this isn't law yet, and we've had takeaways before where we've said, understand it's coming. Watch for another headline in the future. But what do we do now? Well, if you're really interested, take part at the end of this month in the IRS's public opinion on their new draft, because you can give your opinion. We talked the other day, once again, about pot 1, pot 2, pot 3. It's pot 2. You have a chance to influence it. So if you're really worried about it, go influence it and give the IRS a little piece of your mind, whatever that may be. We're going to get to the big idea here in just a second, but before we do that, I want to talk a little bit about Emperor Investments, because especially in our first headline today, where we were defining some of the terms that we use in investing, top-down analysis, bottom-up analysis, being an investor versus being a trader, Emperor Investments very much in the investor category, not in the trader category. They very much have a deep value approach, much like one investor that you've heard of, Warren Buffett. If you go back and look at their track record, you'll notice that their turnover, another thing we talked about today, not high. They are buying and they are holding and they are culling things that don't do what they were supposed to do. So they invest in companies. They don't trade companies. They invest in them. And then they hold them. And the cool thing is they have a set of criteria about why they're holding that company. And if the company doesn't perform up to that criteria, they then exit your portfolio. And guess how much work you had to do? You just had to sit and watch how well Emperor Investments did for you. Money in the Morning is brought to you by Emperor Investments. Automated investing refined. Reason we like Emperor Investments so much is because whenever you think about investing, you have to ask yourself about risk. And when you use this deep value approach that they use, and they're custom building a portfolio out of companies that have a long track record of consistent dividend payments that they're likely to have continue paying in the future, and can be purchased at a fair price, you know that they're going to be an investor that's working for you. And while most robo-investors are passive because they tend to buy index funds and ETFs, Emper is a combination of passive and index funds because you will own the actual companies. They're not active like a trader. They're active as in they set parameters for the companies that you own, and then they sell them. If you're buying a robo like Emper, but they invest in index, you're stuck with a company that doesn't meet the criteria until it loses that index, until it leaves that index. Here's the deal. You can get 6 months free using our link, which is awesome. You can kick the tires for 6 months and see how they work for you. By the way, while you're there, go look at past performance. Incredibly awesome. I'm stumbling on the link. It's emperinvest.com/MITM. emperinvest.com/MITM for 6 months free. And you can be an investor with a company that has a very congruent feeling about investments as you have. All right. Let's jump into the big idea, shall we? So we talked about two things. We talked about the election and in a couple of years ago in the U.S., and tied that to this election in Israel. And we didn't talk politics. We just said that if you're a trader, you're interested in this stuff, but an investor is looking past all that noise. What an investor does and what a trader does also, either one, is they have a framework that they look through. And so you're thinking to yourself, well, I want to be an investor, Joe, or I want to be a trader. You set up your framework first. And then when it comes to your taxes, imagine how tough this is going to be for people who don't know anything about where their bread's buttered, where their income comes from. But if you have a system around all of your income and where it comes from and how you keep track of that, it's then going to be incredibly easy to shift gears when the IRS makes this much, much more refined approach to your W-4. We know it's coming. We're not sure exactly what it's going to be. We'll know more at the end of the month, end of May. But we do know that it's coming. So now's the time to work on your system. Over on my other podcast, Stacking Benjamins, we had a guest on named Austin Kleon on Wednesday's show of this week. And Austin has a new book called Keep Going. But in it, he talks about setting up systems and using those systems as if it's Groundhog Day. Have a daily routine. Set up your daily routine, and then if a day doesn't go the way that you want it to go, instead of making the same mistake tomorrow, change the daily routine. And I absolutely love that. If you know what your routine is as an investor or as a trader, and you know the discipline, you're going to set that up, and then you're going to tweak when things don't go the way you want. When it comes to your tax preparation that you're doing this year and also looking at next year, if you have a system, it's going to be easier to fix the system. Live like it's Groundhog Day, peeps. Set up your system. Live a better day tomorrow. Get some greatness. That's going to do it. That's our big idea. Thanks for hanging out, everybody on Facebook. Thanks to everybody on YouTube, everybody listening out there wherever you're listening. Thanks to everybody who's left us reviews of this show. We really appreciate it. We'll see you back here next time on Money in the Morning.
This show is created by Joe Saul-Sehy, hosted and produced by Bobby Rebell and Joe Saul-Sehy, is engineered by Caden Thompson, and all put together by a pack of well-trained ferrets down here in Joe's mom's basement. You'll find Bobby at the Financial Grown-Up Podcast and Joe at the Stacking Benjamin Show. Go say hi to them there, too. Online, visit us on Twitter at Average Joe Money and at Bobby Rebell, or come join a live recording at our Facebook page. That's facebook.com/iStackBenjamins. I know you already know this too, but Money in the Morning is for entertainment purposes only. You should not act on anything recommended by a bunch of entertainers in a basement or even a Manhattan kitchen without first consulting your financial advisor. And second, dude, have your head examined. Have headlines you'd like us to discuss? Send them to joe@stackingbenjamins.com or put them on our Stacking Benjamins closed Facebook group. This show is a collaboration of Stacking Benjamins LLC and BRK Media LLC. Copyright 2019. All rights reserved. I'm Joe's mom's neighbor Doug, and I reserve the right to always say, we'll see you next time back here on Money in the Morning.